Right, morning guys. The 8th of October, Monday morning, about 11 a.m. Hope you've all had a good weekend of rest away from the markets and now ready to smash the week ahead, get some pips in the bag. So straight into it, I want to start with USD CAD. Um, I think we're at quite an interesting point here. If you look on the weekly time frame, obviously we had that massive gap down last week, and although price did attempt to come lower towards that 1.275 weekly support, the gap was filled, and I think the majority of this was, well, not the majority, but it was helped by the NFP announcement on Friday, which I'll talk a little bit more about shortly. Um, but yeah, we came back up to retest this box zone, and now this week already we've seen bullish momentum continue, and we are right in this really key zone here, right in between the moving averages, which will be acting as resistance, as well as this 1.3 major resistance level. So I can see this as a really big region for reversals. However, given the bullish momentum, we'll have to wait and see. The oil prices of oil, if I just step over to that quickly, then you can see that we were taking off. Price closed on that shooting star last week, and now we are looking for a possible bearish retracement before assessing further price action. So oil is looking bearish at the moment, but with that will bring the value of the Canadian dollar down as it correlates to oil. And then this is the dollar index, and we're looking strong on the dollar index. So both of those things would lead us to take USD CAD longs. However, like I say, we're in that crucial region. Long term, you can see on this weekly time frame, we have got this bullish fib here, where we came into that refined region with that spike last week, and we pushed out of that. Now, I do expect at least some sort of reversal from this region, whether we come back to kind of this 1.2890 region before going higher, or whether we are able to actually come back as low as 1.275 in line with that, the test of that uptrend, which I would like to see at some point. However, this is quite a significant candlestick, quite a significant reversal. On the smaller scale, we can actually take this high here and this low, and that would be a valid fib. So as you can see, prices um, currently around the 50% region. Again, another confluence lines up bang on with the monthly resistance, which would leave us heading towards a retest of that uptrend. So really interesting region right now. I'm going to step it down to the daily time frame, get a better perspective. Now, price did form a new low last week. After this, it was a spike higher, but failed to close past the previous highs, um, and rejected that simple moving average. Big bearish pressure, managed to catch a position on this, new lows, and now we're looking at this region. We've broken above that 1.29 daily support, well, resistance, which is now turned to support. Rejected it with the following candle above the moving averages, and we've now hit that monthly resistance. We are slightly below the previous high. I would like to see a break of this before heading towards these highs at 1.32 and potentially even higher, 1.3250. But as I say, really got to watch this region. I'd take this as essentially the last real region for reversals while still accepting the downside scenario. As you can see from this Fibonacci retracement tool, we are right in that refined zone, the really key area for reversals. Now today we've only had four candlesticks. We're on the fourth H4 session. Um, we're only about 12 hours deep into the session, and you can already see we've had massive bullish pressure. So I mean, I'm not sure if there's enough in it today to continue. As you can see, we did have this bearish candlestick which occurred all in one day, so we could be seeing something similar, a push back up towards these highs. But similarly, normally if we see a big move early in the session, then it might indicate that we're setting up for a pullback, which could leave price closing as a shooting star back in that moving average support zone, which would leave us looking at downside in line with our initial bias. So I'll be looking for shorts back down towards 1.28, or alternatively, should we manage to break through this 78.6 and close above, then we are looking to take longs towards previous highs up here and potentially 1.25, which we do have as a major resistance level. Now the 8-hour time frame gives us a bit of a clearer perspective. We've already had that moving average crossover to the upside, which would suggest that we are heading upside. I wouldn't like to enter positions just yet as we are in that region. As I keep mentioning, had a slight pullback off the last H4 candlestick, and now I anticipate closing this 4-hour time frame and this 4-hour candle something like this, something like a doji. I would expect a period of indecision or consolidation around this region before pulling back. Even if we are looking to go long, I wouldn't be surprised to see price pull back for a higher low, give people a chance to enter shorts after the rejection of this, and then take off back towards previous highs. But as I say, I do expect some form of retracement, at least to retest the moving averages. We could see consolidation as the moving averages close in. But yeah, we've really got to watch this zone today, guys. So onto Aussie dollar. Now, actually, before I do that, I did want to point out on USD CAD the monthly time frame, because as I specified, this region right here, the monthly moving averages have converged, and we are at that region. We have broken that with this month's candle already, as they are crossing over, but again, just highlights the importance of this zone right here. As you can see, this channel is carried through onto the monthly time frame, so it's quite significant. So onto Aussie. Now, very bearish last week on on Aussie dollar. Pretty much bearish all week. Bulls attempted upside here, failed at the exponential moving average and just mounted all the way to that 0.7050 weekly support level. So we have now formed new lows, and this is new yearly lows, almost 2 years, as you can see, all the way back in 2016. The start of 2016, we just about managed to come down to that 0.6850 level. But yeah, things aren't looking great for the Australian dollar right now. Now we've met that 0.7050 level. Price may stall, consolidate for a short amount of time, potentially come back up. However, we could be seeing price fall all the way to that monthly support level. If we try and get a Fibonacci tool on here, we take this high, take to this low, we can see that we do have a retracement right to that 61.8, almost pinpoint, and then prices are mounted. We have just caught on that weekly support, but we could be looking at that 6990 region as our first downside target from this point. However, we'll have to look at the smaller time frame to assess what price is actually doing. So you can see that we formed that new low, gapped up slightly from this level, which does confirm this support region. But other than that, we've had a moving average crossover, looking very bearish currently, and I do have that 0.7010 plotted as support, which is obviously just above that region that we just specified, which was the 6990. So price could well spike to this region. We do have business confidence fundamentals tomorrow morning. That's from the Australian dollar, which could push the dollar lower. And as you can see, we've got this Fibonacci here, which does line that extension target up very nicely with that 0.701011 region. So really got to watch price here as the moving averages close in. Could be seeing a small amount of consolidation. Today's open has set price up nicely to close as an inside bar, so there's potential for some consolidation here as the moving averages close in on top of price and squeeze price to this level before either breaking out further downside or upside. Yeah, I mean for the upside, initial targets would be at 0.7166. We saw how crucial that level was before. Or downside, we are looking at that with the specified level before mounting towards that monthly support. Now, take a look at the 8-hour time frame. The end of last week, we did have that big bearish candlestick. Price did look like it was reversing, coming back up for the bullish retracement, and then it was slammed right back down to that 0.7050 for the weekly close. Now 4-hour, you can see we've already started to consolidate this region in this little box range here. Moving averages closing down onto price, squeezing price to that level. So I'm just waiting to see what happens here. Let Monday get out of the way, potentially even Tuesday, before seeing a move. As the simple moving average closes down in price, we could be seeing something like this, or alternatively, as you can see, we've got that counter trend line here. We could be seeing a move to this target region before retesting that resistance and heading lower down towards monthly support. Now, if you take a look at USD JPY, and really happy with how analysis has been playing out on this pair. If you remember back to last week and even the week before, I was saying that price would approach this level right here, it's 114.50, and reverse. Last week closed as a lovely doji with a large upside wick, and that is a rejection of this crucial zone here. You see price rejects time and time again. Now this is still a higher high, so we are still bullish on this pair, but I do expect this to cause a retracement to form a higher low. So I mean, on a weekly time frame, we're looking at least to come down to this 112 kind of 300 level, which lines up with a test of the moving average support. I'm not sure how much lower than that. Potentially we could be visiting the 111s, 111.50. However, I wouldn't like to speculate past a cap of this moving average, this exponential moving average, because this market is looking nice and bullish currently. Can't really see any great Fibonacci's. We did have this weekly fib where price came into that refined zone, and then last week completed that move almost to the T, within a few pips hit that 114.511 extension. So now if we extend that, move this to that next high, that next higher low, then lines up that 38.2% / 50% region with the test of moving average support as just specified. I mean, the initial target for that fib is a little bit in no man's land, but then the 117 monthly resistance is lined up nicely. It is within the two Fibonacci extension targets. So I'm not sure how much I do like this fib, but it does give us an overall perspective on direction. It's a nice directional bias as to where price appears to be going currently. So onto the daily time frame, and we did have that following meeting that 114.50 target. We had that bearish, that inside bar, and following that did have a little bit of indecision. However, we were still bearish, closed below a 113.75 weekly support, which has now turned to resistance, holding on that blue exponential moving average. But already today price has smashed through that level as we look down to this 113 region as daily support. You can see if we look back here to mid-July, when price was using this level as resistance, it tapped that level, spiked through, and then mounted from there. So now we're touching it from the upside. It's likely to provide a good level of support, which will line up nicely with the test of the simple moving average. So we could be seeing price come to that level and then as they move higher low before continuing upside, or alternatively we could touch that level, retest the weekly resistance before heading lower to that 112 region, which I did specify price has the potential to come down to on the weekly time frame. Now 8-hour time frame, yeah, it shows that we have been forming these small lower highs, lower lows, but until today we were failing to break this previous low here. The last 8-hour candle spiked through the moving averages after finding support on 113.75 level, but then prices just melted and the moving averages are just crossing over now, as we await the close of this. But as I say, we've now broken this previous low as we look down to the 113 as our initial target, and this does seem to suggest that price could come significantly lower than the 113 level, but just as an initial target. This is on the day, back to the daily time frame. Yeah, I mean, this has price with the potential to come all the way down to this 110.80 level, while still being bullish. However, first targets 113 before assessing the 112 and 111.50 level. So much the same story here on the 4-hour time frame. Confirmed moving average crossover, big bearish candlestick, as we currently are retesting this 113.40 region. May even come back up to test 113.50 before extending towards that 113 level. And then we'll see how price responds around that level, watching for breaks to take it even lower, or about to go back to that 113.75. Now finally onto GBP USD. You can see on the monthly time frame, as actually let's start on there. Moving averages do look to be crossing over to the downside. However, I can't help but look at this as a higher low, which it will be if we can confirm a break back above these moving averages this month. So I mean, bear in mind this 1.322 level when we're looking at smaller time frames to see the significance there. But I mean, if we look at plotting a trend line on here, then looking at something like this. So I mean, this trend line has already been broken. That retest last month, perfect retest. So I mean, we are looking like we've got the potential for downside, but that's just on the monthly time frame. Onto the weekly time frame now. So you can see last week we did look like we were reversing, we were taking this formation here and continuing downside. However, price did close last week bullish to meet that simple moving average back above that 1.300 psychological level, and back above the prior week's closes. Now following this week has already begun to move bearish as we approach a retest of that exponential moving average and back towards that 1.3 major support. That's a resistance, sorry, it should be support now. Um, but yeah, if you remember, like I just said, on the monthly time frame at 1.32 level, it can be quite significant, lining up with the moving averages. In line at 1.325 weekly resistance, we could be revisiting that level. I mean, in terms of a fib, would look something like this. Could be pushing higher. I think if we do break this level, given the fact that it will be above the monthly moving averages, we could push even higher. It could be the beginning of that bull run for the pound. However, we'll have to be watching these levels very closely to look for reversals. So onto the daily time frame. See prices still forming lower highs, lower lows. Last week came down to that crucial level of daily support, to around the 1.292, and then we had this big bullish engulfing which took us right back to moving average resistance. Now, following that, this was following the moving averages crossing over to the downside, and the moving averages are still bearish currently, despite these two big bullish candlesticks on Thursday and Friday, and this took us back above the moving averages, which will now be acting as support all the way to that 1.3139 level. Price came just shy of that to make a new lower high, as we now watch today's candle around that exponential moving average. If we do manage to close below that, then that would confirm that we are looking to head lower, back towards previous lows and all the way down to that 1.28 daily support. However, if this moving average does hold and we manage to close back up above this support region, then we could be seeing price making attempts at previous highs around 1.32 and 1.3250. Now, in terms of Fibonacci, again hit that low to this high. C price did come back down right towards that 61.8, and now could be heading higher. We haven't yet formed a higher high or a higher low, so I wouldn't be surprised if price fell from here, taps this 1.30 monthly resistance, monthly support, to make a new higher low before firing up towards 1.3250 weekly resistance. Now onto the 8-hour time frame, just get rid of that bigger fib. Again, we are back at that exponential moving average as support. On this time frame, would suggest that we are looking quite bullish. We've had these discrete highs, higher highs and higher lows, and prices form that new higher high right at that 1.3139 level, and now we are testing that moving average support zone. It's going to be quite a crucial zone, because as I say, if broken, we will be seeing at 1.3 monthly support and potentially even lower down to this 1.2850 level. But alternatively, we are making higher highs and higher lows. So this could be our new higher low before extending upside to this weekly resistance level. On the 8-hour time frame here though, we do have a fib, should look something like this, give this reversal as a reversal, as a retracement from our refined zone. So and again with that extension target lining up with that 1.2850 support level. I mean, that does look like quite a nice setup. I will like to see price break those longer term moving averages. So if you look at the 4-hour time frame now, you can see that we've already broken back through that exponential moving average of support, and this 4-hourly candle has already come back up to retest that region as resistance, and price is now melting as we're talking now, looking to come down towards this 1.3 monthly support level. But yeah, not much else to say here on the 4-hour time frame. Pulling back slightly, obviously as you can see, we do have a level of support here. But yeah, I think we may be seeing downside here from the pound. Definitely, as we're on the 2-hour time frame now, looking for that moving average crossover there. I'd expect to see a crossover, retest of the moving averages before melting. So yeah, let's wait to see what happens. I'll update you guys midweek.